Okay, in 22-2, today we're going to be talking about doing an income statement, stockholders' equity, and a balance sheet for corporations. So, we have talked about all three of these financial statements in Chapter 16, which I know happened to be in Accounting 1. The good news is that they are very similar, so if you remember a little bit about that, it should kind of come back to you. If not, make sure to reference chapter 16. That'll be where it shows all of the specific details related to all three of these financial statements. But specifically talking about the income statement, we are still going to have net sales, net purchases, gross profit, income from operations, and our other revenue, which is our interest income. All of that gets reported. However, since we've done Accounting 1, we've learned the following additional informations that also have to be included on our income statement. That includes rent income, gains and losses from the sale of our plant assets, and accruals for our interest payable or our interest expense. So when we look at our income statement, it is going to be quite long because of the fact that we have our operating revenue here, to figure out our gross profit. And then we have all of our operating expenses listed here. And then over on this section, which is really just a continuation, we have this income from other operations, which talks about interest income, rent income, our gains, and then our other expenses like interest expense and loss on plant assets in order to get us down to our net income after federal income tax. So like I said, the other income is new. Our other expenses are new. And then this net deduction is our three new pieces that we're going to add in when we do this income statement in 22-2. Now let's talk about stockholders' equity. Again, go back to chapter 16 if you need it, but it's very similar to the way it looked then. We still report the changes in capital stock and retained earnings. However, the two new things we need to add include the paid-in capital in excess of par, common, and preferred stock. Those two new ones that we learned about when we were talking about debt financing. So here is our capital stock common, paid in excess of par. This is our first new section. Capital stock, that's our second new section. And then, of course, retained earnings was one that we already had. But again, your book will be very helpful as you continue to go through this chapter to reference, because there are lots of specific titles that need to go here in order to make a correct financial statement. Our third financial statement is our balance sheet. The balance sheet that we learned about in chapter 16 for a corporation is still very much the same. We have assets, liabilities, and equity that are reported on a specific date. However, since then, we have a few changes, particularly to the liabilities and equity section of our balance sheet. We need to introduce our long-term liabilities. Mainly what we do here is we list each type separately, and then we subtotal them. Also, that means that because we had current liabilities before and now we have long-term, we need to have a total liabilities that needs to be presented. And then we also have that expanded stockholders equity section with the addition of our paid-in capital in excess of par, common, and also preferred stock. So when we look at this, here's our assets. This part really didn't change. This stayed the same. However, now we have this new heading for current liabilities and listing all of our current liabilities here. We have a total for current liabilities as well. Then we have our long-term liability section, which is new. We didn't have that before. Those are our payables and our bond payables. And then we have our expanded stockholders equity section, which shows the capital in excess of par and preferred stock. And that's it. So the 22-2 section work together is going to be quite long because we have to do all three of those financial statements. So let's head over there and tackle that.